Hey guys, have you ever wondered what it takes to get a loan? You're about to find out right now. Hi guys, Toby the Realtor here with Ed from Guaranteed Rate Affinity Mortgage. We are going to be breaking down some loans today and trying to give you guys some good basics on how to approach loans and what that whole world is involved with. So Ed, I'm going to turn it over to you. Just introduce yourself, experience all the things in the world, and
Okay.
give us a background on you.
Thank you, Toby, for having me, Toby the Realtor. I've been doing mortgages for about 22 years old. For 22 years. Before that, I was an executive recruiter. Before that, I was an appraiser, residential real estate appraiser.
Okay.
So I've been in the business a long time. My dad used to have me calling out the white pages for refinances. So
Nice.
that's what I do now. I work for Guaranteed Rate Affinity, and I do loans.
Yeah, Ed is our in-house lender here at Coldwell Banker in La Jolla. So he's one of our main go-tos when it comes to loans.
Working with a lender.
In many cases where you're working with a lender, you may work with more than one, and the reason you work with more than one is because it comes down to, in a lot of cases, it comes down to personality.
Sure does.
So, and the reason I say it comes down to personality is because, even with realtors, with lenders, with brokers of any sort, your clients are going to want to work with people that they get along with. So, do you have any experience with that?
Yeah, I have a lot of experience with that. I work with everybody that wants to work with me, put it that way. But as a consumer, you want to work with an agent that you get along with and have similar interests and personalities, as well as your lender. You don't want to work with anybody that you're not going to get along with. Just doesn't make for a fun process.
Mm-hmm. So like I touched into with my previous video, it's a very social business, and being social people in this business, it is very helpful that you can talk with people and hopefully get to know them and understand them and what they want.
You have a buyer.
Say you get a buyer, all right, and with that buyer, awesome, you've got a buyer. What do they need to know? What do they need to do? And one of my first things that I've learned by mistake and from experience already is you go out, you show them stuff, and then you say, have you talked to a lender? And they go, no. And then you have to backtrack, and the reason why you have to backtrack is because, one, you don't know, you might be showing somebody a house that's way overvalued as to what they can buy. So getting somebody pre-qualified, why would you want to do that, and how is that beneficial?
Yeah, and that's a great point, and it is a great starting point as well. All agents, if you're working with buyers, you want to make sure, like you just said, before you're wasting a bunch of time, effort, money in some cases, that the people that you're working with have been qualified, whether it's pre-qual or pre-approval. And I'm going to jump ahead. Pre-qual basically means you get all the information, you run your numbers, say, okay, based on the information you've given me, looks like we can do this as far as a loan. Mm-hmm. As opposed to a pre-approval, which you do all the same things, however you take all the documentation to support that information.
Right.
So basically tax returns, pay stubs, things like that. But it's extremely important for realtors to know that you want to be working with people that are qualified.
Right.
Period. So you're not wasting your time. And if they're not qualified that particular time, there's a good chance that your lender, whoever that lender could be, can coach them to a point of being a potential buyer. But it's extremely important, like you just said, the first thing you should ask a potential buyer is, have you talked to a lender? Well, you have. Have you been pre-approved? Great. Do you have a letter? Great. Tell me about it.
Mm-hmm. Save yourself time as well as, your lender time.
Yeah, well, and you know what, to be fair, it's also important to the consumer. I mean, the consumer doesn't want to go out and look at properties that they can't afford.
Right.
It's something they're going to want to do before going out and looking. Like you said, it's no good looking at a house on the hill if you can't afford a house on the hill.
Right.
So it's important, as important for the consumer to know exactly what they're getting into before they even start looking around.
Right, and especially now with today's market, with it being so crazy. I actually was on the phone with a client this morning, and same conversation is, have you spoken with a lender? And he's like, no. And I kind of broke it down for him because with today's market currently, it's, if you're going out and looking at properties and then you have to backtrack and get a lender, that property that they're interested in could be gone by the time you get all those pre-approval letters done.
Yeah,
so
no, that's a great point. Especially, like I said, in this particular market, if you're not ready to go, then you shouldn't even be looking.
Right. So keep that in mind.
Types of loans.
Right now we're going to break down the different types of loans. So we're going to break them down in 3 different categories. First up, Ed, is conventional loans.
Conventional loans.
Conventional loan consists of...
Conventional loans consist of conforming and conforming high balance.
Okay.
And those loan amounts up to 543 is considered conforming. 543 to 753 is considered conforming high balance.
Got it. Okay. And then, is that all as far as...
That's it for conventional.
Next up is...
Jumbo loans.
There we go.
Jumbo loans.
So jumbo loans is anything over 753. Also considered conventional, however they're jumbo, and it just refers to the loan amount.
Those amounts, so 753K and above. So that could range from anything. Like you could be like 753, or you could be 27 million.
Yeah.
Okay.
Exactly right.
Cool. All right. Now, third up is
government loans.
Got it.
Government loans.
Government loans are great loans. There's a VA loan, which is 100% financing, phenomenal loan, and then there's an FHA loan, which is also a government loan. FHA loan is usually used by people that have low to no down payments.
Okay. Now break down the FHA just for me, just a little bit more, because hopefully this is going to go out to a lot of first-time buyers.
Okay.
All right. So FHA, I mean, just give me the breakdown of like maybe the difference between like putting down 20% and not putting down 20%, and the differences with that.
Exactly. So first of all, when you put 20% down on any loan, it's going to be your best financing. You get the best rate. You're going to avoid mortgage insurance.
Okay.
Okay. The benefit of an FHA loan, especially for first-time home buyers, is generally speaking they don't have a ton of money saved up for down payment. FHA allows as little as 3 to 3.5% down.
Okay.
It does come with mortgage insurance.
Right.
And it's upfront mortgage insurance premium, which is built into the loan amount, and then there's a monthly mortgage insurance payment.
Okay.
But it's usually for the first-time home buyer because they don't have to have 20% to put down.
Right. Now, for the mortgage insurance, how much, like on average, did you cover that? How much on average does it usually add to, like, say, break it down, like, maybe say you buy a house for 400K. Is that an easy number to work with?
Sure.
So, okay, 400, like you buy a house for 400K and you put 5% down. All right. So, what kind of extra payment down on would that really kind of break down to?
With those numbers,
with
those numbers, you're probably looking at 100, 150. Something like that.
Okay.
There's a couple parameters that go into it. It goes into your credit scores.
Okay.
And it also goes into the debt to income ratio. So depending on what those parameters are, it fluctuates a little bit. But generally speaking, on a $400,000 FHA loan, your monthly mortgage insurance is probably between 100 and 150 roughly.
Okay.
How do I do this?
How do we go about getting a loan? So what does it take? What do you need? All the docs. Ed, you want to break something like that down?
Yeah, I'd love to. We live in what's called a full doc world, and that means, and I'm going to use this as an example, besides a DNA sample, all lenders are going to ask for everything.
Everything.
And when I say that, that means...
Blood type excluded?
Blood type included.
Okay.
That means they're going to look at your tax returns, they're going to look at your W-2s, they're going to look at your pay stubs, they're going to look at your bank statements. Really what it is a credit risk assessment by an underwriter. So they want to make sure you have the ability to repay whatever money you're going to borrow. So they're gonna make you provide a bunch of paperwork, and they're going to paper trail money to make sure it's legitimate. So be prepared. You know, I always forewarn people when they're starting the process that there's going to be a lot of questions. We're going to kill a lot of trees, and you're going to have to just provide everything that they ask instead, even if it seems redundant, if it seems like it's not applicable, you're better off just providing it and getting the answer that you need.
Okay.
So yeah, it's really, some people it's an eye-opener that have never done it before.
Right.
The people that have done loans expect it and go through it a lot smoother.
Right.
So.
And a lot of that can be done electronically now, right? Like scanned and everything. And so
Absolutely. Yeah.
Okay.
Yeah.
Another question on that is, say, and I'm not trying to put you on the spot, but say you're like a gig worker, you know, or like a real estate agent, you know, do you, as far as just a steady income stream is sometimes a little bit difficult to come by.
Yeah.
So how is it still the same, unfortunately?
No,
Okay.
It's not, especially with COVID.
Okay.
You know, so you're talking about self-employment. Self-employed people with COVID, and for, I guess, good reason, you know, business has changed.
Right.
Maybe they're not doing as much business. Hopefully they're still in business, but they're going to have to jump through a couple extra hoops that's opposed to someone that's a W-2 employee that is on a steady salary, that's straightforward. They're going to make sure they do all kinds of stability calculations for self-employed people.
Okay.
But as long as, I mean, you'll know, your client will know, hey, I haven't done any business in the last year, so I'm not going to look so good.
Right.
There are alternative programs. We talked about some of the basics, the jumbo, the conventional, the governments. There's also not what's called non-QM loans, which we didn't talk about, but non-QM loans are for outside of the box.
Okay.
So sometimes I can qualify somebody, you know, if someone's self-employed and they just haven't reported a bunch of money to the government because they're not going to pay taxes, but they've been still making deposits that can show and prove that their business is still thriving. We have loans for those.
Okay.
So there really is, I mean, and it's a cliche, but it really is true. There's a loan for everybody.
Okay. Cool. As far as like a timeline is concerned, so say somebody comes to you with all of the docs and they're ready to go, you know, all collated and filed and ready to go. Like, what's the time?
I love that client.
Right? Yeah. So, what kind of breakdown, or like, how long would it take for, you know, somebody like you to process that and get them an answer of like, hey, you can afford this much?
Yeah. So, like we mentioned, the pre-qual and pre-approval. What I like to have clients, when you bring me a client, Toby, one of the first things I do is have them fill out a digital application. And the digital application is a loan application. You know, it's a 1003. It gives all their pertinent information. I can work off of that information. Like a lot of times I'm going to call on Sunday night, hey, Ed, can you pre-approve these clients? We made an offer. We need this now. And I can certainly do that. And I do it pretty easily with the digital application and the information that's provided through that application. The documentation, you know, like you said, if I have someone that gives me that file and I get it done, I can do it at the same time.
Okay.
So I would say, generally speaking, to be fair, you know, it's probably 12 to 24 hour process depending. And don't quote me on this, but I've done them sooner in an emergency situation.
Okay.
And it really has a lot to do with the organization of that client.
Right.
That's interesting.
That's going to break down just kind of interest rates and how they play into your home buying process.
Yeah, obviously the lower the interest rate, the lower the monthly obligation is going to be, the more buying power you have.
Right.
So as we were just talking about, we're at historical lows right now. The rates are in the threes. As opposed to, you know, you can look at the history of mortgage rates when they're 16, 17.
Right.
The amount of home that you can afford with a 3% interest rate compared to a home you can compare with even a 5% interest rate is a big difference.
Yeah.
Is a big difference. And you can go to all lenders. I encourage every client to shop me. You know, make sure you're getting the same rate. We're generally about the same. All lenders are about the same. We work off the same market.
Right.
But yeah, just always do your due diligence. But do know that the rates do make a difference in your buyability.
Don't be afraid to shop, and don't be afraid to shop. And then maybe if, you know, all those lenders come back with roughly the same price, then work with the one that you want to work with. Just touching back on the very beginning of this video, is work with the one that you want to work with, because, you know, they seem to have your interests in mind, not just the paycheck.
Yeah, and you know, we talked about it a second ago. And that's my own personal opinion, but you want to work with someone not only that you like, someone that you trust, someone that communicates, as opposed to, you know, some people just call an internet company and it'll be a call center person who's getting $100 a file, who's not going to work on a Saturday night or a Sunday afternoon, and not going to answer the phone when you need them. So there's definitely a difference, and not that that's bad, it's just different. You know, if you're cool with that, and then go with that. Really depends on your personal preference.
Battle of the century.
A lot of you may be renting and you're like, I can't afford a home, but do you really know that for a fact? So the difference between renting versus owning, in my personal opinion, I'm going to turn it over to Ed here in a second. My personal opinion is, say you're spending $2,500 on rent. Is a mortgage that much different in a cost? And when it comes down to a mortgage, what's the benefit? Is you're paying yourself back as opposed to paying somebody else's mortgage. And that's one of the things that I will tell clients more often than not, is you're paying yourself back. Yes, you've bought a home and it's a big commitment, but the truth is that money, in a sense, is going right back into your own pocket. So Ed, if you can expand on that, that would be great.
Yeah, and I agree with you 100%. And that's one of the first things I ask a first-time home buyer, because generally speaking, they're a little nervous. It's a big commitment. When I bought my first place, it was super scary, and I had no idea. But I did know that I was paying rent to someone else, and I finally realized, because I was in the business at that time, that hey, I should be, like you said, paying myself back, because there's a tax benefit, of course. It's also a great investment. You can watch it just like a savings account. You can watch your money grow. And it's cyclical, of course, but it's always going to grow in the end, right? So, like you said, if someone's paying $2,500 a month in rent, you should absolutely 100% take a look and see what it looks like to be the owner.
Right.
You know, because it's going to be a lot easier than you think it is, and you're going to be an owner. And,
Right.
and it's going to be way more beneficial to you than not.
Right. I mean, just as an example, I bought my first house, one of my homes. I don't own anything now, so just break it down. But one of my first homes I bought was that my parents helped me buy, of all things. They helped me buy. It was a half of a duplex. So I bought just one half. And over the amount of time, I mean, I refinanced that thing and pulled out money so I could pay off bills. I mean, there was a number of things that allowed me to do. And on top of that, like Ed said, it was a tax break. I mean, you get tax benefits from owning a home. I don't personally remember what they are. Ed, do you?
Yeah, I think we're up to $750 in interest. So when you get your mortgage statement at the end of the year, it's your interest. So then you give it to your tax person. I think you go up to $750,000, pretty significant amount that you get to write off, depending on your situation and where you stand in your tax bracket. But it's a lot better than renting because you don't get any of that benefit. Like I said, think of it as an investment, which is hard because people get very emotional about purchasing. However, think of it as an investment, and like you did, you can use that investment to draw money from, to pay the bills, do whatever you need to do. So that's really the mentality that you should take as an investment.
Yeah, and I covered it on another video. It is a big purchase, and it's one of the largest purchases that a person can make in their entire life. But if you have the right people on your side, whether it's your lender or your real estate agent, you want to find the people, and I know I've said this before already in this video, but you want to find the people that have your best interests in mind. And when I say that, I mean look for those people that are looking out for you and not just looking for that commission check. So Ed, I don't know if you've had any experience with that. I mean,
yeah,
after
absolutely.
22 years.
Absolutely, yeah. It's you should work with someone that's going to educate you. And there's different levels of buyers, right? Some buyers need a lot of education. Some buyers need some education. Some real estate savvy investors need no education, and I never hear from them until the loan's funds. So you want to work with somebody, whether, like Toby said, whether it's a real estate agent or a lender, someone that's going to answer all your questions and elaborate until you're comfortable with everything that you're getting into, period. And it doesn't matter, I work with people for years before they buy anything. So really you want to find someone that has your best interests at heart, is willing to take the time to educate you, and cares.
Yeah. Whew. I would like to thank Ed for coming out. I think we've covered everything that we can cover because I wanted this to be a basic breakdown on loans. If there's something that you would like to hear us cover, then by all means, hit us up in the comments. And once again, I want to thank Ed. Ed, where can people find you?
Well, Toby, thank you for having me, first of all. We did cover a lot. I can cover a lot more. There's a lot more to know. I'm always open for questions, whether you use me for lending or not. You can always call me. My cell phone's 858-922-3325, 858-922-3325. You can always email me with questions, ed.woolery@grarate.com. So ed.woolery@grarate.com. And there's no question that's too small or too big. Honestly, I know Toby, I've known Toby for a while. We both really honestly just want to help people. So thank you again for having me, Toby. Look forward to the next one.
Yeah, thanks. And I will take all of Ed's information and I will put that down in the comments as well if you want to get a hold of him. On top of that, if you like this content, if you like what you see, hit like, hit subscribe, do the YouTubey thing so we all look good. And please share it with your friends. So once again, I want to thank you very much for following along this far, and we will see you again on the next one. All right.
Should we look at that real quick?
No.
No? Okay.
No. We're just going to keep going.
Okay.
We're going to start that over.
Wait for